Welcome back to another episode of Sunday Stock Talks, the place where we analyze the major market indexes and go over potential economic data that might affect the markets in the upcoming week. So make sure you stay till the end of the video for the full market analysis. So we're going to go ahead and start off the video by going over the analysis on SPY. And this is the chart and lines that I drew from last week's episode. So we're going to go ahead and have to delete some of these support and resistance lines and identify the new support and resistance line. So I'm going to keep the top one right here because it seems to have worked as a really good as a previous resistance, which now turned into support. As you can see right here, bounced off this resistance and uptrended higher. But I am going to get rid of this previous support because it's so far out of the current price action that it's not going to come into effect. We're going to keep the 200-day SMA line just because it's a good indicator of whether it's a bullish or bearish trend. But as you can see, we reached a high of 321 right here on Friday, and it kind of started to flatten out a little bit. It wasn't able to reach any more higher other than 321.27, so that leads me to believe that it's about time for a pullback. And the reason why I say that is because last week we were literally going up every single day of the week. We didn't have a red day at all, and the RSI just kept on getting higher and higher. And if you guys don't know what the RSI is, it's basically just a measure of how oversold or overbought a asset is. And so in this case, every time the RSI is above 70, that's when you consider it overbought. You can see multiple times throughout last week the RSI on the ETF SPY was hitting that overbought area. And even though we were hitting that overbought area, we still kept on uptrending higher. Up until Friday, we can see we had this really big gap up from 314 all the way through 321. And part of that has to do with all the jobs report that came out, which was better than expected. But, in my personal opinion, I think we went up really fast, and we're due for a pullback. We can go ahead and zoom out a little bit. And so if we think there's going to be a pullback, we need to identify where that pullback might take us to. And so that's where these support and resistance lines come in. So we're going to go ahead and get a line right here, drawing. So the current support seems to be right around the 318.50 area, which is right here, right where it's hovering. It wasn't able to break that, but like I mentioned, I think we're going to have a couple of red days, if not at least one next week, just because we've been uptrending really quickly. So once it breaks that support, the bad thing is that like I said, Friday, we had this huge jump from 314 all the way to 321. So there really isn't any indication of support or resistance right around here. So it's basically a free fall. And, unless the market makers want to make a support and resistance right around here, the next previous support is going to be right around the 315 area, which is right around here. So let's go ahead and add another line right here. So this is where the next previous resistance, which is now had become support, right around the 315 area. We go ahead and draw that. There we go. And so there's a huge gap right around here. There's almost a $4 gap because we went up that fast. And so overall, I think it's just going to be a waiting game to see if any of the news that we're going to cover a little bit later on in the video is going to have any say on whether or not we're going to be able to keep on uptrending, or if we're going to break this support of 319. But from the looks of it right now, like I said, the RSI indicates that it's quite overbought. And we can see, we don't even have to look at the RSI, that this is in fact overbought, because literally we've been going up every single day last week. And to be doing that and reaching basically the pre-coronavirus highs, that's a little bit concerning, just because not much has changed economically. Things are starting to get a little bit better, but it's going to take time. And so I definitely see a pullback to around the 315 area happening within the next week. So now we're going to go ahead and hop into the chart of the Dow Jones. So here we have the chart of the Dow Jones, and it's a very, very similar chart compared to the ETF SPY. So we're going to go ahead and have to delete some of these previous lines that we drew. In fact, let's just go ahead and remove all the drawings. Let's just go ahead and clear drawing set. Hopefully that doesn't remove the SMA. So no, it doesn't. So as I mentioned in the last week's episode of Sunday Stock Talks, I mentioned that, if we can get the Dow Jones to get above the 200-day SMA line, that was going to be a really, really good bullish uptrend news. And that's exactly what we ended up doing, last week, which was last week Friday. We closed right around the 354 area, and we actually broke through that 200-day SMA line on Wednesday, and it just continued uptrending. And I think this had to do a lot with the fact that SPY also kept uptrending, so they helped each other out, and that's why they have a really, really similar chart pattern. As you can see, kind of had that little nice big gap up on Friday morning, just consolidated a little bit, and then started downtrending, and it has basically the exact same pattern here on Friday. So we can go ahead and draw the lines, which is going to look basically the same as what we just did on SPY, because they're basically really, really close to each other. So right here on the Dow Jones, the support seems to be right around the 270 area, resistance of 274. You can go ahead and draw another resistance line right here. The resistance is right around 274. And so, like I said, the RSI chart looks exactly as on SPY. It's pretty overbought in my opinion, and based on the RSI, that's a good indicator that it does indeed seem overbought. And so our assumption based on this is that in the near term future, probably next week, we might see a pullback. But the problem here is, as I mentioned in SPY, there isn't much price action. This is just a really, really rapid movement from the 266 area all the way to the 274 area. So unless the market makers find some support or resistance right around here, it's gonna have a pretty nasty drop all the way down to the previous support, which in this case it's pretty close to the 200-day SMA line, which is right around the 263 265 area, which is right here. Let me go ahead and draw another line right here, which is right here, which is where the previous support resistance, which now became support, is. And so that's the problem when stocks or ETFs go up really, really fast, is that they tend not to provide a support and resistance just because they move up so fast. And so when it comes down to rebalancing and having a pullback, there's not much there to go based off of. And so we can have these pretty big drops, and I really wouldn't be surprised considering the fact that similar to SPY, we've been going up every single day of the week last week with no red days at all. And so I wouldn't be surprised that we had a pullback of about 2 to 3%, considering we're up close to 5% for the week. Well, it might be a little bit more. I'd have to go back and check. But, look, just on Friday, we were up 3.2%. Or 3.12%. So yeah, definitely it seems like we're higher than 5% for the week. So that's pretty much it for the analysis of the major indexes. Now we're gonna go ahead and go over the potential economic data that might impact the market, and we have a few. We don't have a lot. I think we have like 2 of them, but we can go ahead and explain those to you right now. So now we're going to go ahead and review the economic data that's going to be released that might affect the market, and there's not that much. There's only actually 3 that I just looked over, and the first one is the OPEC meeting, which is on Tuesday. However, news about that was already released over the weekend, and what was said was that all the countries in OPEC, they're going to do an oil cut production. And so what that really means is, if we remember the basic laws of supply and demand, when there's less supply of something and that demand stays relatively the same, that's going to mean that the price of the asset or the commodity is going to increase. And so what we can expect to see on Monday and all throughout next week is the price of oil futures and any stock that has to do with oil. We should see a slight increase in them, so that's something we should watch out if you want to trade any stocks regarding oil. The next news that is going to affect the market is on Wednesday, which is the Federal Reserve's meeting. If I can find it over here. yes, the FOMC economic projections, and so this is going to be probably one of the most important things that might affect the market next week because I am correct. I think the Federal Reserve's the man in charge, which is Jerome Powell, is going to speak, and they're going to make a statement regarding the interest rates and as of right now, it says that the consensus is it's going to stay at 0.25, and that should be really important. I really don't see it changing or going higher, and if it does go higher, that might mean that the market might downtrend because we're still recovering from everything that happened during the pandemic. So increasing the interest rates right now wouldn't be the best decision for the Federal Reserves, but that's definitely something to watch out for. And the last piece of economic data that is important next week, it's on Thursday, which is the initial jobless claim and the continuing jobless claim. The continuing isn't that important because obviously people are still unemployed right now, but the initial one is the most important one. And why? Because the initial means how many new people are applying for are having these jobless claim, and so obviously we should hopefully see a decrease because as more and more things start to open, that means more people are going back to their jobs, and so that means that the initial jobless claims are going to be decreasing significantly. If for some reason this number is higher than the consensus, then this is going to be a red flag that even though things might seem like they're getting better, they're truly not. But that's until Thursday, So hopefully the initial jobless claim is lower than the consensus, and so that means that there's a lot less people applying for jobless claims. But that's pretty much it. There's only those three major economic data. There's other economic data, but they're not as important as the three that I just mentioned. But I hope you guys enjoyed, and I will see you guys in the next one.